Hello friends, this is Vijay Bamvani here. I am in this video going to share one more indicator with you from our in-house statistical trading model, the IBEX. I had promised my friends, my viewers, that I would be opening the door to our trading model and sharing more and more output from the same with you in the near future. It's now time to start honoring my commitment, and bit by bit, one by one, I'm going to share these indicators with you. How many do we have? Over 6 dozen. And how many are you seeing in the weekly market outlook video? You know what's happening. Hey, if you love the impetus indicator, you're going to just super love this indicator. And in a brief while, I'm going to share with you just how it works. So what is the underlying philosophy in this indicator and what does it do? Basically, in this indicator, we are trying to guesstimate. Remember, at the end of the day, we are all basically trying to guesstimate as to where the market is headed and just how much. So, supposing it's the end of the session today, you want to see what the market is going to do tomorrow and whether what happened today is sustainable or not. Believe me, even though it looks trivial, it puts you ahead. And we are basically going to see whether the move was flattering to deceive or was it something that you should put your hard-earned money on and say, okay, I'm going to bank on this and I'm going to bet my money on this. Big difference. So what is basically the heavier than air machine called? It's called an aircraft. And what is the underlying philosophy in flying an aircraft? There are 4 forces. 4. Lift takes the aircraft up in the air. Weight crashes it down. Thrust takes it forward. And drag drags it back. Self-explanatory. Believe me, trading is combat. And when I borrow philosophies and techniques and the underlying physical formula that goes into flying, it fits very well into trading. All right. So stocks, commodities, derivatives, currencies, bond prices are also subjected to lift, weight, thrust, drag. So at the end of the day, when the market is short, I start to form this indicator based on today's EOD or end of the day data, and it tells me whether what happened in the market today is likely to persist tomorrow based on lift, weight, thrust, drag. All right. So this is not going to be very difficult to understand. Even a primary school 4th standard child will easily understand, as I'm going to show it to you in the next 2 or 3 minutes. Now, why do we want to know what is likely to happen tomorrow? Because a good, sagacious trader keeps a few bullish items and a few bearish items on his heads-up display. A heads-up display is a ready-made gun sight from which you take aim and fire. All right. So you're basically keeping a couple of counters on the bullish side and on the bearish side ready. And by using this indicator, you will have an advanced guesstimate of whether you should be focusing on the long side or you should be focusing on the short side. And that helps you allocate your capital effectively and in the right direction. That means optimal deployment of capital and therefore obviously higher trading profit. So let's take a look at the indicator itself. What you're seeing on your screen is the indicator. We've not named it yet, and because it is denoting the lift, weight, thrust, drag, we call it the LWTD indicator itself. Let's keep it simple. So what you're seeing on your screen are 2 lines. Now the blue line represents the percentage gain or loss in the Nifty futures. It could be anything. It could be Bank Nifty. It could be your particular script. It could be a commodity. It could be anything at all. Like I said, we are extremely flexible and malleable in our work. So what you can see is the Nifty itself, and this is represented by the blue line. Remember, it's the percentage gain or loss. And the red line is the lift, weight, thrust, drag indicator. How do you interpret it? What does it tell you? And how are you supposed to act? Now, basically, what I'm showing you are 4 possible scenarios. You can't have any other scenario other than these 4. All right. Now, what happens when both the Nifty and the lift, weight, thrust, drag or LWTD indicator are up? It tells you lift off. The market is about to lift off. It's going to be bullish tomorrow. If it happens at the end of a bullish session, please try to focus on those stocks which are on your buy list. All right. So, barring unforeseen circumstances, you're seeing what's happening in the world right now. Ukraine, Russia, Saudi Arabia, Yemen, China versus Taiwan. So if any of that news comes out, we have no control over that. But barring that, focus on the long side. Second scenario, both the index or that counter, whichever you put in the place of the index, and the lift, weight, thrust, drag indicator is down. Both are pointed down at the end of a bearish session. What happens? Wait. What happens? Weight brings the aircraft down. So the markets are going to possibly fall. Please focus on seeking short selling opportunities in the market. Now that's your cue. Scenario number 3. The Nifty is up and the lift, weight, thrust, drag indicator is down. There's basically a divergence. One is going up and the other is going down. What does it indicate? Remember one of the 4 forces, drag. It's not exactly a crash, it's a drag. Market may attempt to rise, but it can encounter selling at higher levels. So, you should not be selling at the opening price of the next day, but mid-session, whenever you feel the market are looking toppish, you should seek short selling opportunities. Now, the scenario number 4, the counter, in this case the Nifty, is down, whereas the LWTD is pointing up. Now this is your thrust phase. Does it mean that the market is going to zoom? Not necessarily. What it does mean is that the markets may dip tomorrow, but it can find buyers on dips. There will be buy the decline kind of a market. So you should also, don't rush in and buy at the opening bell, but at least seek buy opportunities on declines. Now, before some of you ask me, Vijay, how much can you wait for the market to go up before shorting, or how much can you let the market go down before buying? Check out this video, which I have recorded on 17th of February 2021. Here I've given you a very simple, like I said, I specialize in simplicity. We dumb down the concepts to a level where my criteria is a 4th standard school child should be able to trade. So when you see this video, you're going to see as to how we gauge how much will a particular counter go up or go down during the day before we can call for a guesstimate or a reversal. So in these 2 scenarios where the LWTD is going in the opposite direction, either up and the index is down, or either down when the index is up, you wait for that percentage move before you either buy the dip or sell the rally. Now, where can you find this video of 17th February? Here up there, if you're watching this video on desktops or laptops, you click on that I button. you'll get a hyperlink on that video. If you're watching this video on mobile phones, don't despair. In the description segment below the video itself, there are hyperlinks to the 17th February video itself. Now, playing these markets is not an easy job, but when you start using statistical approach, you will see that you're keeping emotions out of the picture and you're playing specifically with numbers, unemotionally and completely logically. That's what puts you ahead of the crowd. I am a sucker for staying ahead of the markets, which is why the logo says always ahead. We don't mind losing money by staying ahead of the markets by a few weeks, but at the end of the day, the guy who takes the prom queen home is the winner of the party or the prom night. So basically, I hope this answers your queries about what you can do with this indicator. Now, before I sign off from this video, friends, I sincerely have a request. We guys are professional risk takers, prop traders as a company, and we understand only the markets and only trades. We need to reach out to a lot more people to get this free content across. My content was, is, and is going to remain free. That's my commitment to you. But it would help if the time, energy, and money that we are spending on creating this content reach out to more and more people. My request to you is, can you help me reach out to a wider audience by circulating my video, my WhatsApp broadcast, free broadcast, and subscribing to my social media account so as to allow me to help you to become better traders. By the way, if you want to be added to my free broadcast list, WhatsApp broadcast list, the number is right up on your screen. Please do send me a WhatsApp message from your number. If possible, also enclose your email and your full name, and I'll get you going right away. I thank you for your patience, my friends, in watching my video. Do take very good care of yourself and your trades. I would request you to subscribe to my YouTube channel if you haven't already done so. Click on the bell icon to receive instant alerts about fresh content being put up out here. And in the comment section, do let me know what you think of our work. This particular indicator is now a part and parcel of our weekly market outlook video on the coming Saturday itself. I wish you have a very, very profitable day, my friends. Take good care of yourself. Bye-bye and good luck.